afternoon, all. I'm Elizabeth Gores. I'm the Chief Strategy Officer here at the American Fintech Council. I am excited to be accompanied here with a great panel today and in collaboration with the Bradley, Arant, Boult, and Cummings law firm, our strategic partnerships. And with that, I'm going to hand it over to Brian Odell to introduce our esteemed panel today.
Yeah, thank you, Elizabeth, and thank you all for joining us today to discuss combating fraud in the banking as a service space. And I do also want to thank Elizabeth and our partners, the American Fintech Council, as well as our panelists for helping to organize this webinar. My name is Brian Odell, and as Elizabeth said, I'm a partner at Bradley, Arant, Boult, Cummings, or Bradley for short. I've been practicing law for approximately 25 years now, and primarily in this space in the regulatory compliance and government enforcement and examination space. And so, as you guys are all aware, there are federal and state regulators that are very focused on the supervision in the BaaS space today. And I think just last week, I'm sure a lot of you guys saw that there was another sponsoring bank that entered into a consent order with the FDIC, and that consent order addressed the bank's relationship with its fintech service providers. And a large part of the regulators' concerns that we see in this space is that BaaS partnerships have not established adequate safeguards to protect the institution, to protect the deposit holders, and the consumers against the risk of fraud. And so today we have a panel of experts. They have technology, accounting, operational, legal experience in advising banks and fintechs in this space on developing appropriate fraud detection and compliance management systems. So joining me today, I want to introduce each of our panelists. We have Steve Bishop, who is the Chief Operating Officer at Old Missouri Bank, Scott Elkins, who is the VP of Financial Intelligence Unit at Pathward Bank, Jason Chorlins, who is a Principal and Banking Practice Leader at Kaufman Rossin, and Leah Campbell, who is an attorney in our Bradley group, in our Financial Services Practice Group. And so before I turn it over to our panel, I did just want to give a brief overview of kind of Bradley's financial services practice and what we've seen as outside counsel in this space, both on the side of really counseling on the development of effective BaaS relationships and also advising companies that are subject to consent orders and working with our clients and the regulators and making sure that those consent orders are complied with and completed pursuant to the regulators' request. So just briefly, our firm has about 700 lawyers, and we're geographically located in the Southeast, really from Houston and Dallas all the way over to Charlotte and DC and everywhere else in between. And of those 700 lawyers, we have about 80 or 90 that are in our banking and financial services group. So we are divided into a number of different practice groups. For the purposes of this webinar, did want to focus on two of them. One is kind of our regulatory compliance group, and that's really where we work as outside counsel, kind of advising banks, advising fintechs on developing relationships and services that are compliant, that meet regulatory expectations, and that appropriately safeguard against fraud. And so this is what I kind of talk to or describe as our kind of our proactive regulatory compliance work, in which we go into banks and fintechs and we help them be compliant before there is an actual issue. Before the regulators are examining you, before the regulators are investigating you, and certainly before a consent order is entered. And we try to proactively help you be compliant with all the legal and regulatory requirements out there. Now, if you do get into an examination or an investigation or a consent order that leads to a consent order, we have a second group, which is kind of our government enforcement group that is part of our banking and financial services group. And that's where we work as outside counsel on really negotiating with and complying with consent orders. And again, if you looked at the consent order that was issued last week, you can see that complying with a consent order is not easy. It many times takes a year or multiple years to do so. It requires look backs on many occasions with your past practices. It requires periodic updates and continued communication with the regulators. And, depending on the complexity of the issues that the investigators or the regulators find, it can be a very complex ordeal. So we assist clients in doing that really from the beginning to end as well. So with that introduction, I would like to turn it over to our panel. And I'd like to first just ask a question with regard to Steve Bishop, who again is the Chief Operating Officer for Old Missouri Bank. So Steve, as we understand it, you are building out fintech partnerships at Old Missouri Bank. So can you talk to us about your processes when it comes to onboarding a fintech and how you seek to build out strong cannot talk, strong fraud detection and response systems from the beginning of those relationships?
Yeah, well, I was, but now you scared the hell out of me, so I'm not going to pursue that. Yeah, thanks, Brian. It's a pleasure to be here talking to you guys today. But as you mentioned, we are so OMB Bank is based in Springfield, Missouri, and we've pursued a BaaS strategy, and that we will have our first fintech going live next month. We've taken a couple years investigating this, and a lot has changed over the course of those 2 years. We've been very purposeful in how we've done it. I've met with the Fed on multiple times, both the St. Louis Fed and then the Novel Activities Board. Just talking to them, getting advice or trying to get advice, which in a game with the rules aren't clear, you're always trying to figure that out. And I've always led with compliance and leading with the regulators, and that's been really good. And now, as we go forward with our first fintech going live, we have to actually back up what we said. And Brian hit on a lot of good notes. Like you want to make sure you're working with good representation. To me, this whole BaaS play, whether you're on the banking side or you're on the fintech side, it's all about relationships and partnerships, and like having the right people that you're communicating with, that you understand what you're doing. It's tricky because we're embedding bank technology functionality within the fintech's product, but the examiners look on that end user as the bank's customer. So they hold me responsible for whatever that does. So having the right partnership as you look at this, and like you have the right representation, understands the regulatory landscape, like absolutely pivotal. That's we've tried to be very cautious as far as shocking for a banker to say that, right? But like we want to make sure we do this the right way so we can be successful and then onboard multiple fintechs as we move forward. Brian, I think you're on mute.
Yeah, so Scott, thank you, Steve. I appreciate that. Scott, wanted to turn to you. And again, Scott is the VP of Financial Intelligence Unit at Pathward Bank. So Scott, at Pathward, you have already onboarded a number of fintech partner companies that you maintain relationships with. So Steve kind of talked to us about onboarding fintechs. Tell us about your approach to managing fraud through the life cycle of the relationship. How do you maintain adequate fraud detection systems and relationships with your fintech partners?
Yeah, thanks, Brian. Also, very glad to be here to talk about the topic of fraud. Not always a fun topic to talk about, but unfortunately, we have to discuss it. And if there's anything, those that have joined on the call today, that you can take from any words that I may say. I will always tell or advise any of our partners, please spend the money up front in your fraud monitoring and your compliance, and make sure that is all locked down. You're either going to spend that money on the front end, or you're going to spend it in the back end with losses, reputational risks, regulatory issues, and of course fines. So that is one large point I want to drive home, and can't stress that enough. As far as fraud, we manage fraud holistically, both from what we call our owned portfolio, and I'll speak to that, where we're very tactical and strategic in what we do with our monitoring. And by tactical, with systems that we have, really looking at transaction base, we tie it into our dispute overview, and really have a good cohesiveness with that team to look at some of those trends, talk through them, and utilizing the capabilities of our systems to constantly tune rules, looking for those large pockets or looking for the small pockets, which in this day and age, the small pockets can turn into huge pockets, unfortunately. But yeah, we have the oversight of disputes, like I said before, and surprisingly enough, we find a lot of our trends in our dispute review. Yes, it's behind the transactions or the scheme, but we use a lot of those characteristics to again help with our preventative effort. Really, along with our managed portfolio, knowing and understanding your portfolio, how it functions, the type of transactions you're going to see. We work very closely with our Visa and MasterCard representatives and look through our reporting on what we're seeing, whether that's on enumeration or bin attacks, spikes, domestic cross-border transactions. It's always going to happen, and it's how you react to it and mitigate it and put those strategies into place. So definitely being very, very nimble. Relationships, can't stress the relationships with our BSA officer and that team with compliance. I'm more on the operations side with that blend of BSA AML, and we have that good cohesiveness. And again, teams, we have a very strong team, and that's years of training, industry training, from our alerts team to our cases team, continual discussions on how these trends are coming through, account reviews, strong QA from our management team, audits and exams. It may sound weird, but embracing your audits and exams. It's taken me years to really embrace those, because at the end of the day, if your QA program is strong, your audits will be strong, and hopefully your exams will follow suit. So really having those in check, your policies and procedure, of course. And then from our sponsorship level, the communication and having a good monitoring system that they implement, again, right from the start. It's very, very crucial. Have those dedicated resources to be in that system and know how it functions. Strategy, rules assessment. Your bad actors, they're going to find a way. They're going to find a way into your portfolio. And I think Brian said the term experts. I will admit I'm not an expert. I'm more of a SME, but I can tell you that seeing fraud over the years and how it's evolved and changed, you have to react to it and try to stay, a step ahead. So we are in the back end on the SAR filing. We learn a lot from our SARs, and unfortunately, those can get pretty large at times, but they're a great learning opportunity and great for the teams to know and share, best practices.
Yeah, thanks, Scott. One of the things you said is you're either going to spend the money on the front end or you're going to spend it on the back end. And, we see that a lot when we get involved. We see those companies who spend it on the front end. When they do get to an examination or investigation, it's very clear that they've thought through things and a lot of, looking forward and proactively. A lot of times when we're called, we get called on the back end where an investigation is already underway, or findings have already been found, or a consent order is already being negotiated. And sometimes if they would have just taken the time to do what you said, be proactive and do some of these things on the front end, you would have seen a much different result with probably a little bit of that effort, financial impact to the company, if they would have been more proactive.
Yeah, it's so very true. It's the constant battle. Again, I'm on the operations side, the business versus the ops versus the compliance. I mean, for what we do, we're a cost. It's not glamorous, but so very important to have that all those locked down.
Yep, agree. Thank you, Scott. Well, Jason, let's turn to you. And again, Jason Chorlins is the principal and a banking practice leader at Kaufman Rossin. So Jason, You work closely with fintechs to stand up and maintain relationships with sponsoring banks. So can you talk to us about your approach to advising them on building out appropriate safeguards that meet the expectations of regulators, as well as current or future sponsoring banks?
Yes, thank you, Brian. It's a pleasure to be here. And Steve and Scott really have already hit a lot of the key topics. The first thing is making sure your fintechs that we work with, and I'll give you an example. We're wrapping up right now a gap and vulnerability assessment from a fraud perspective of a fintech processor. The concern was that they were being reactive, like you mentioned, Scott. If they had taken the time to be more proactive up front, putting in appropriate controls and infrastructure. And the one thing we always like to talk with our fintechs about is having a fraud framework or governance program in place. And one of the best ways to do that is, they have guidance out there, whether it's through the Association of Certified Fraud Examiners. They have basically 5 principles to look at. Establishing fraud risk governance policies, right? Performing fraud risk assessment. All starts with understanding where your fraud risks are. Designing and deploying fraud preventative and detective controls, right? We all know that we have to identify those controls up front. And then obviously, making sure that those conducting investigations, Scott, you mentioned going through the process of actually learning a lot from the feedback loop through conducting those investigations and reading those SARs. And then obviously monitoring and evaluating, the total fraud risk management program through KRIs and KPIs. But it all starts with taking that proactive approach. And sometimes fintechs, compliance has always been an afterthought, right? We talk about fintechs. What is their job? Is to build technology that allows us to have financial services with accessibility and access. Well, they're not thinking about the compliance aspects, right? Because they want to be able to build a tech company. But if they put in appropriate fraud mitigating practices, that will allow them to demonstrate not only to potential sponsor banks, but also that they have a robust program in place that their fintech or their process or product that they're actually offering won't be taken advantage of or being utilized by illicit actors. So we always talk about those 5 principles, but again, it always starts with a good risk assessment and working with not only sponsor banks or banks, but also with the various fintechs to help them understand where are their various fraud risks. Is it cyber risk? Is it account takeover? Is it synthetic fraud? Is it, and sometimes they don't understand that their actual customers, whether they're agents, are typically their weakest point, right? Because they provide ease of access to their system or to their product. So starting off with a good understanding of what are the relevant fraud risks, allow you to design controls to help mitigate those relevant fraud risks down the line. And when we talk about what you guys need to have in place after that, customer verification. Probably the biggest area that we've been helping sponsor banks as well as fintechs is understanding where the verification. You have a multi-prong approach to understanding and verifying a customer's identity. Just 2 weeks ago, an article came out about AI and synthetic identities fooling different crypto exchanges. These synthetic identities have real life motion and video, and they were passing KYC checks. Well, if we don't have appropriate controls in place to mitigate those fraudsters from leveraging our technology and our platforms, we have an issue downstream with our sponsor banks because we can't mitigate that fraud. And that those transactions and that activity is flowing through our sponsor banks, thus creating a lot of concern and issues, right? So obviously it all starts with customer verification. One of the best tools that we've seen, and you mentioned, Brian, some recent enforcement actions. If you read those recent enforcement actions, those historical look-back reviews are not necessarily based on transactions for suspicious activity. They're based on CIP, customer identification, right? And we're actually working with several of the financial institutions to develop preemptive controls to help identify those anomalies. Those anomalies may include maybe looking for accounts open with the same social security number, but different names and date of birth. Whether they're opened up with fictitious names, whether they're opened up with a PO box. So all of that starts at the customer verification process, as like Scott mentioned, being proactive and not reactive, right? Then it goes into real-time fraud detection technologies. We're seeing obviously the heavier use of machine learning and artificial intelligence in order to better monitor the activity for potential fraudulent transactions. And Scott mentioned disputes. Great way of knowing where your potential fraud is, because you have gamers out there who understand the system, right? And if they understand that, hey, anything under a certain dollar amount, we're going to get automatically credited because it's not worth, so we're just going to dispute. You have to have a process in place to identify those gamers. And I think that's where a lot of fintech companies are now saying, hey, we're incurring way too much fraud losses. This is well above our fraud risk tolerance, and we need to put controls in place. So the way that they've been able to do that is identify potential gamers. But Scott mentioned something really important. Whether or not they have systems in place, those systems need to be tested to making sure that they're effective for identifying fraudsters. So if you're a sponsor bank and you have a fintech that has some sort of fraud technology or platform, ask them for their validation and the results of their most recent audit as it relates to those different technologies and fraud risk management programs, because that'll tell you everything you need to know. Can you get some assurance about the proactive measures or reactive measures that your fintech partner is implementing? And by doing that, that'll allow you to have a better understanding of where what maturity level their fraud risk management program is. And then last but not least, obviously education and awareness, right? I always say it from a fintech side as well as the sponsor bank side. Understand what the fraud risks are, understand what your roles and responsibilities are, and making sure that you get job specific training. A great way of doing that is, doing a training plan. We have that on the BSAML side. Hey, we know that you have to do annual training for BSAML and sanctions, making it more fraud focused as well, right? Because they go hand in hand. We've always talked about FRAML, right? The intersection of fraud and AML. But then we've seen even more with the triangle around fraud, cyber, and AML. But when you expand that out now to the consumer protections that have an impact, whether it's Reg E or disputes or complaint management, now you have a all encompassing various compliance regulations that have overlap with fraud and cyber risk and BSAML. So now it's even more important for us to educate our employees, educate our fintech partners on what are those various risks. So that way they can be in a place to better mitigate those risks going forward.
Yeah, thank you, Jason. Let's hear from our final panelist now, Leah Campbell. I've actually had the pleasure of working with Leah here at Bradley for the last number of years and have enjoyed it so much. So Leah, you work closely with sponsoring banks and fintech partners to advise on developing contracts to get these relationships off the ground. So from your vantage point, how should contracts assign roles for the parties and best managing fraud? And after all the agreements are signed, what legal systems do you recommend banks and fintechs have in place to guard against fraud?
Okay, thank you. And I'm excited to speak with all of you about this subject. The main thing to remember is that essentially what you're entering into with the bank is a commercial agreement. You're entering into a commercial arrangement. And so your contract needs to take into account all of the things that Scott and Jason and Steve have talked about. So if you are during that relationship, you're going to need to have audit rights if you're a sponsoring bank. So what does that mean for the fintechs? You need to be prepared for somebody that's going to come and audit you. You want to think in advance about setting up regular trainings, the ability to open the books with to have access to the accounts, so that the bank can step in and potentially perform its own monitoring. But just to step back for a second, one of the things that I find is very common is when our fintech partners are presented with the contract from the bank and it's 30 pages long, and then it has exhibits and schedules for information security requirements and things like that. The intent there is essentially to create a solid plane. If you view it as a plane that you guys are both going to get on, and you're going to be in the air and you won't be able to fix the plane while it's flying. That's why you have a good contract structure in place at the beginning. So that's the purpose of that. In terms of allocating risk, my view is informed by the regulator's view, and the regulators view this as essentially an outsourcing of the bank, the outsourcing of the manufacturer of bank products to somebody else. And so we no longer use the term outsourcing. Now we use the term sort of third-party risk, but essentially our regulators told us as recently as just last week that in their view, they're going to look at the banks first And to the extent they are able to regulate the banks themselves, reach through to the fintechs via the banks. So as between the fintech and the bank, you're both responsible for fraud monitoring. As between the regulator and the bank is responsible for it. And we're never going to get off the hook. That's one of the privileges of being able to take deposits and lend at high rates, is you agree to be highly examined. So the fraud monitoring tools are, in my mind, you're not ready to go live until you have those in place. It would be like, going back to the plane analogy, not having sufficient fuel to keep you in the air. Eventually you're going to come down and it's going to crash. And I think that's if you can view it that way, that compliance first is the real requirement. I think that helps you sort of lead in terms of sort of being prepared and ready to go. One of the, we have different, sort of horror stories that we can tell, but the main thing that is that the sensibility when you take on a fintech partnership with a bank is to understand that you're still working within the safety and soundness parameters that are set up around the banking system. And sort of coming to it with that mindset, it is just really helpful in making sure that it takes off. And I think that one of the things that I don't know what the experience, Scott and Steve, you've had, but in terms of onboarding, the time for onboarding can sometimes be surprising. In terms of how long it'll take to get the contracts buttoned up and you guys ready to launch. And so in some places I hear it's over a year, other places it can be 3 months, but it can take a lot more time than you might expect. And frankly, than you've come to expect in the financial technology space. So all contracts in my mind are based on a 3-legged stool. I'm using a lot of different analogies here for metaphors, but representations, basically that's your due diligence where you look really deeply at your fintech concerning what level of their abilities are. The promise to do something, like, for example, they're going to promise to monitor AML for AML, and they're going to promise to train. And then the third leg is audit. That is a crucial piece of the protection of the bank. Once again, we're flying a plane together. We need to make sure that all systems are running properly. So that's what you can expect from a contract perspective from a bank, is that type of wraparound arrangement. And I'll just hand it back over to you, Brian.
Yeah. Thank you, Leah. Appreciate that. So let's go to this next question, and let's just open it up to the panel at large here. So, you guys have talked a lot about building systems that appropriately safeguard against fraud. So despite these best efforts, or because we are sometimes brought in after certain systems or relationships have been established, we all see areas for improvement to these partnerships, fraud detection systems. So can you guys talk to us about what you've seen go wrong and how our audience can avoid making similar mistakes?
I'll start there, and then I'll let the other panelists jump in. I've seen a lot of these systems because we do a lot of the system validation and independent tests and even fraud reviews, where the systems actually are not aligned to the risk associated with the organization. And there's no continuous feedback loop around, hey, we actually identified this fraud. We actually were notified of this fraud. Did our fraud system actually capture it? And if it didn't, why not, right? Doing kind of a post analysis of what was potentially missed and why was it missed, and not making appropriate updates to the system. A lot of the times, especially at financial institutions, we're relying on third-party vendors, and whether it's out-of-the-box software, and if it doesn't have the ability to be customized to address those risks, how are you guys demonstrating that there's no potential gaps in your fraud monitoring? Because fraud is constantly evolving. Fraudsters are always 2, 3, 4 steps ahead of us, and we're always finding out about the fraud after the fact, and then making adjustments for a fraud scheme that has already evolved and gone into something else. So where we struggle with continuous improvement is not addressing emerging risk in a timely fashion and getting the information from our systems in order to be set up to mitigate that potential fraud risk. So I always recommend understanding what fraud typologies are out there, what emerging fraud risks are out there, and do you have a potential gap from your fraud monitoring perspective, or is your system properly set up to address those potential emerging risks? And if you guys are doing a post-case analysis and saying, hey, this was missed in our system, you also have to ask ourselves, why did we not properly set up our system? Did we not properly do user acceptance testing, or was our system have limitations around its ability to monitor for certain fraud typologies?
Yeah, I can add on to that. Leah, I think you mentioned time to onboarding partners can be varied, and it continues to evolve, especially with the number of partners and programs that we've onboarded over the years. So sometimes it's not ready for market, hurry up and wait. Some have maybe heard or been involved with that, but again, goes back to what I stressed before. Make sure everything is locked down up front with your fraud monitoring system. And I think all of us probably get asked, well, what system is best? Well, I like to equate that to what automobile is best. I mean, they all have their different bells and whistles. They all have their different functionality. I mean, some might want a race car, where I may prefer a pickup. As far as you have to fit the monitoring applications and tools that's best for your portfolio and what you need and fully understand. Jason alluded to it. Gap analysis. Why didn't that get caught? And measuring that against your business and risk appetite. Sometimes we come across that. You hear that, you're going to have fraud. Okay, well, how much fraud do you want? Well, someone will say, I want zero. Okay, well, we can lock that down. But guess what? Visa and MasterCard or Discover are probably going to have a little issue with your approval rates being very, very low. So, it's that constant balance and understanding what your portfolio and what your program is. And we do a lot of our onboarding, going through exactly the use case for this program, having that document, identifying all the different risks, collaboration efforts from across the enterprise for a project to onboard all these different views. And what about this? The what ifs, ask those questions. So the onboarding process continues to evolve. And, quicker to market, it's not always best.
I'll hit on a couple of things. So the time to market, like the time of that contract, is really largely dependent on the fintech and their preparedness on the due diligence. And the sponsor bank has to have their stuff lined up as well. But the more you can do up front to gather that is absolutely pivotal in that timeline to get there. But at the end of the day, communication is absolutely the key to everything. So whether you're talking about that feedback loop for the fraud, how do you fix it? Identifying it, Scott, you said there's no best system, but talk to your sponsor bank, because there may be a best system for them and how it integrates with their tech stack and how they can help monitor that, because you're a team and you have to embrace that, not as the sponsor bank is a vendor by any means, because it has to be partnership, and that's so cliche these days saying about a partnership, not a vendor. But in this instance, it absolutely rings so true. Like, have those open lines of communication. When banks have gotten sideways with the examiners, the majority of the time is because it's not because they're not doing something, it's because they don't know how to play it. They don't have good communication. They can't prove that they're looking into how fraud happened and taking corrective action. So, just like the more prepared you can be before you enter that relationship, and you pick the right relationship and really have that partnership, really will help overcome the hurdles that come up.
So we got a question in the chat that I thought might be worth sort of responding. I love hearing back from what you guys are thinking about. The significant fraud trend we're seeing is first-party fraud, where the bad actor is a customer of our partner using their true identity, typically a money mule recruited or tricked into accepting and forwarding ill-gotten funds. we've been able to mitigate this to some extent by velocity rules and slowing down outbound fund movements, but it's still very tricky. I agree with you that this is the ability to create a synthetic identity using some of the sort of online verification tools is, in my mind, one of the greatest risks. In addition to the ready availability of push and pull or debit and credit entries on the ACH system, so much can happen in a very short period of time that it's just very challenging. So I think that those are the two points that I, sort of practical things that I would think about doing is in terms of your CIP, your customer information program, it's got to be really, really different than what you have for your brick and mortar. I think it has to have various different levels of confidence, as you step through various different levels of confidence. And there's so much information that is available that you can cross-reference related to your customers. That you can sort of step through that. You can always have sort of longer wait times before account openings and also keeping lower limits on the ability to transact business. I wouldn't recommend somebody as much as it brings deposits onto your balance sheet. I would be really careful about rolling out debit entries through ACH for your customers. The ability to pull money from their Bank of America account and deposit it into an online account and then just sort of send it all over the place is really it's challenging. And so I would those would be the two practical areas that I would look at is how do we improve CIP, whether it's different background checking, different sort of screening, things like that. Maybe even having an online experience with a person, meeting them, face to face online, although Jason, I think you pointed out that can be spoofed, but I think that what we have to do is evolve CIP up in a way that sort of is much more advanced than what we're used to. I know that isn't the entire answer that you had, but that's where I think that needs to be dealt with there. And then of course, also monitoring the ability of somebody to get access to funds and then start kiting.
I'll just add that, a lot of times that if you're a sponsor bank, right, you could have hundreds of thousands of accounts that are be open through your fintech partners, right? There has to be some level of understanding, right? Because you mentioned, Leah, the service level agreements that they need to comply, right, with applicable rules and regulations, and CIP is one of those. But what is going to be your escalation process if you identify a significant number of CIP exceptions? I think Scott or Steve, one of you guys mentioned having a strong QA process in place, right? Quality assurance needs also to be around CIP and how do you sample and what is relevant, a statistically valid sample for getting a good comfort level with CIP. And if you guys, can do that and you're identifying issues, because that certainly is going to be, if I'm a financial institution, one of my KRIs, key risk indicators for, hey, something's going wrong here. They're opening a high number of potentially fraudulent accounts without catching them on the front line. And I've seen success where the sponsor bank works directly with the fintech program and saying, this is our expectation. What are you guys doing on the front line? How are you guys minimizing the risk of potential fraudulent accounts being onboarded to your platform? And I think when you actually develop that true partnership around what is the expectation and what is the fintech doing, there's then less of those bad or illicit actors coming into the platform. Now, if you have somebody who's verified their ID, they're being used as a money mule, obviously you have to have good transaction monitoring rules put in place to then escalate that and report that back. So it's kind of a full circle there where you want to keep the bad actors from coming in, but some people who actually are illicit actors with good identification and that they're verified will still do illicit activity at the end of the day.
The questioner also asked about reputational risk, and I thought that was a really important piece to discuss also with the sponsor bank in terms of a risk to manage. Sorry, Scott, I stepped over you.
No, that's first party fraud, first party dispute. It's huge, and it is very difficult. It's very difficult to detect, and Leah Jason, you make great points. Yeah, if passing the CIP and the verifications, the multi-factor authentication, and everything, the transaction monitoring 100% is key to that. You know, I'll move a different way on the first party disputes and dispute abuse. We see this a lot, and there's losses that are occurring. Jason, you mentioned Reg E. You know, it's up to the issuer to prove that dispute, that it is or isn't fraud, or they did not commit that. And we see a lot of that first party that are really testing your controls to see if you are looking through these disputes, or are you just blanket issuing credit for these disputes or fraud claims. And you know, that's one of those where you take a little extra, whether it's a systemic system where you're identifying these again through our dispute process, or it's an upfront review. That's one of the practices that we put in place years ago, where we're looking at these disputes and we're picking on those, we're picking up on those common trends, or those areas where we feel this is the customer that's been involved, and you know, taking the necessary action. So it's huge in the industry. I know when I talk to Visa and MasterCard, that's a topic that they see quite regularly. So.
The one thing I'll add, just I think you know, we definitely had first party fraud even in our brick and mortar. And to Leah's point, it's you know, we had better mechanisms now, but like, the money had moved out by the time we identified it. And so while that person made those transactions, we had no recourse. And that is like having the proper procedures and controls in place for that money moving out is absolutely pivotal. You have to make sure that you're evolving, you know, with AI and all the buzzwords these days. Like, fraudsters are only going to get better, and like at tricking people into being those mules, but also is impersonating them and taking advantage of it. So having a great program to start is not the finish line. It's continually looking at it and finding those ways to adapt as you go forward.
Great. Thanks, everyone. And I do want to encourage, we do have a few minutes left here. If we appreciate the question on the Q&A, and if there is anyone else who would like to submit a specific question for our panelists to answer, please utilize that button down below at the bottom there, and we will be happy to take any and all questions here in the next couple of minutes. And if we have no other questions, certainly any other final thoughts from our panelists before we wrap up here today.
I'll go first. You know, just making sure you have a strong fraud risk management program in place. If you're a sponsor bank, making sure you understand that, what they have in place, do they have appropriate policies and procedures, and making sure you understand what type of reporting metrics that they're providing, not only internally, but to their board around their potential fraud losses, because it could be an indicator for you of either systemic control breakdowns or systems not properly aligned, or a lack of understanding of where their fraud risks are. This is an emerging risk across the industry, and regulators have finally caught on. There is no examination handbook on fraud, right? It's always been captured in multiple areas, whether it's operational risk, compliance, etc. And the intersection of just cyber risk with consumer compliance, AML, and fraud is taking over. And Scott mentioned a lot about disputes. You're going to start to see over these next couple months a high number of regulatory actions associated with consumer compliance programs and a lack of controls. And as we build up our consumer compliance controls, those fraud mitigation programs also need to be built up with them, because most folks don't go into it knowing that they have a zero fraud risk tolerance. So making sure you have appropriate systems that are in place to manage those dispute management processes, leveraging technology and appropriate fraud risk management programs.
Yeah, I would just like to add final comments. Again, spend the money up front. But having conversations like this are always good. It can be difficult to talk about fraud because, again, we're involved with this day to day. Sometimes, we are some experts, but we also like to learn as well. Learning from each other and being open to have discussions and ask questions. Always asking questions of, what is this type of transaction? Have you seen this before? Have you run into this scenario? More than likely, your network or reaching outside your network have encountered it, and it's going to continue to evolve. Fraud today looks way different than it did 10, 15 years ago. It just does. More sophisticated, quicker, bot technology, all the fun terms we love. But yeah, having these forums and continually to emphasize the importance of it, especially with regulations and exams, and reading through those bulletins and looking at the fines that are imposed. It's very scary. It's very daunting. But just having those right controls, as Jason mentioned up front, definitely worth it.
Yeah, I completely agree, Scott. And I just to be too cliche, like fraud is like mistakes. It's gonna happen. That's not what's important. It's how you respond to it that's important. Um, and learning from that, make sure you understand what it is that you do well. Like, we're a community bank. We're venturing out into the tech space and pursuing BaaS. So we brought in experts like our partnership with AFC, finding the right legal counsel. We brought in a consulting group that were former examiners and with a wealth of knowledge just to help us set up the right program. And so don't be afraid to ask for help. Like, know what you're good at, but even more important is know what you're not good at, so that you can find those resources, like Scott said, and spend the money up front, so you're not spending it at the back end. And at the end of the day, communication is king. So keep those lines of communication to all parties, whether it's someone you're bringing in to help, or that relationship between sponsor bank and fintech.
So I can't, you guys have covered it. One thing, so I'll add something else though. If you're interested, monitor chat boards, because that's where fraudsters gather together and pass along information, and they will actually occasionally name, you might be surprised, they'll actually name banks or name fintech platforms that are vulnerable. So that might be spend a little while on whatever the dark version of Reddit is, just to see what's going on. That's sort of my observation there.
Well, great. Well, listen, we don't have any other Q&As. It does not appear, but I want to thank Leah, Jason, Scott, and Steve for your time and expertise today. We really appreciate it. And I want to thank all of our attendees, and Taylor or Elizabeth. I'm not sure if you guys have anything further, but I think that this concludes the webinar today.
Yes, thank you all for participating today. I certainly learned a lot, and I hope you all do too. I know that the AFC membership, from our banks to our fintechs, most certainly have a lot to gain from the insights you shared today. So thank you again to all of our panelists, Scott, Jason, Steve, Leah, and Brian. Really appreciate it. And I have to put a plug in for AFC's annual summit that's in November. We just opened up sponsorship opportunities and enrollment. So it's for November 19th here in DC at the Westin. So if you have any interest, please contact Taylor. And thanks again, all.